Good morning. Thank you for joining us for this webinar, Employee Retention Tax Credit, Pandemic Recovery Funding for Small Businesses. I'm your moderator, Renee Goodnow from the New York Small Business Development Center. Also from the New York SBDC and helping out behind the scenes today, we have Jenny Allen, not on camera, and then we have Greg Callender from the Pace SBDC on camera, and then we have Andrew Flam from the Pace SBDC. He is the regional director, and he will be introducing our speaker today. Today's session is being recorded and we will share it with attendees shortly after the presentation. Attendees are muted and will not be on camera. Please type any questions in the GoToWebinar questions box as they come up. Questions we're not able to answer during the Q&A and questions that are more specific and may take some time to respond to, we'll likely take offline for the Pace SBDC team to follow up on. If you submit a question, we'll not mention your last name or your business name unless you reference them in your question. As I mentioned, today's host is the Pace Small Business Development Center. The Pace SBDC is part of the New York SBDC network of 22 campus-based centers and outreach offices located across New York State. The New York SBDC is a U.S. Small Business Administration resource partner. Our free services are made possible by funding from the SBA, New York State, and our host campuses. With those housekeeping items off my plate, Andrew, I will turn things over to you to introduce our speaker.
Great, thanks so much, Renee, and good morning, everyone. Thanks so much for joining us today, whether you're here in New York City near our campus in Lower Manhattan at Pace University or joining us from elsewhere in the state. Really appreciate you taking the time to join us for a very important topic that we're really keen to help bring to you today on the Employee Retention Tax Credits. I'm joined by my colleague at Pace University SBDC, Greg Callender, one of our business advisors. Thank you, Greg, for joining us. And we'll be introducing our guest speaker today, Ben Ofori, in just a moment. First, wanted to sort of start off just kind of letting you know a bit about kind of who we are and what we do. For those of you who are not working with a small business development center here in New York State as of yet, as Renee had mentioned, our center is one of 22 located throughout New York State, and our focus is on offering one-on-one business advisory services to both existing small business owners as well as aspiring entrepreneurs. Greg's one of our team of terrific business advisors who offer that service to businesses each and every day. Our focus is on a wide range of issue areas such as access to finance, helping businesses with marketing and sales strategies, accessing procurement opportunities, operational challenges, and then clearly recovery and kind of re-envisioning what your business might look like post-pandemic. And I think this topic kind of builds in very nicely to that. So again, all of our services are offered to you, the small business owner or aspiring entrepreneur. Everything is offered at no cost. So our focus, as I said, is on this one-on-one business advisory services. We do also offer a wide range of training programs, both our center as well as our colleagues throughout New York State, offering training each and every day, kind of looking at opportunities to dive more deeply into individual topics that can help you operate your business more effectively. So in the chat in just a few moments, I'll put in links both to contact us as well as how to arrange a one-on-one business advisory session with an SBDC advisor. Again, those sessions are available to you at no cost, and the counseling request form takes just a couple minutes to complete. I'll also put in the chat a link to upcoming sessions that both we're hosting, as well as a number of our colleague centers from throughout the state are hosting as well. I did want to take a quick note to reference, I guess this session is the first of a number that we're going to be doing in partnership with the New York State Society of CPAs, and we really, really appreciate their partnership and collaboration helping bring some very, very important content to you, the small business owner. So as I said, today we're starting with the Employee Retention Tax Credit. We do have a couple of other sessions that are scheduled for later this month into December. We have Tax and Accounting 101 for technology startups. That'll be scheduled on November 14th. And then we also have a session on small business tax liability reduction strategies on December 15th. So hopefully I'll help put a couple of extra bucks in your pocket to get ready for your holiday shopping. So, and we do have some other sessions that will be scheduled for after the new year as well. But if they're on and joining today, I do want to kind of thank in particular from the NYSBDC both Ramona Cedeno and Rick Kravitz, who've been terrific partners in this developing this programming. And then obviously, I guess again, I'll introduce our speaker in just a moment. So one final thing, just wanted to kind of again remind you all, our services are offered to you at no cost. And if you have any topics today that strike a chord that you feel like we can be of assistance with as you're looking at financing issues, bookkeeping and accounting issues, how to be able to kind of more effectively operate your business, please, I would recommend kind of you connect with our center, and one of our business advisors can connect and work with you in terms of working through those issues. So with that, I wanted to kind of kick off and kind of turn the floor over to our guest speaker today, Ben Ofori. And again, we really appreciate Ben joining us today. Ben is a CPA and director and principal of Karpos and Associates LLC here in New York. And we're just delighted, an industry expert and kind of a subject matter expert on employee retention tax credit. I think it's going to be very, very valuable and very important for our clients. So we really appreciate you all taking the time today to join us. And again, Ben, for you for leading this session for our small business clients. And with that, I'll turn it over to you. Thanks, Ben.
Thank you very much, Andrew. Thank you, everyone, the entire SBDC team at Pace University. Thank you, Greg. Thank you, Renee, Danny. And of course, a big shout out to my good friend Ramona and the New York State Society of CPAs for facilitating this. And let's get started. I'm happy to be here. Thank you all to the audience as well for tuning in to listen to us. So a little bit about me. I have a little over 2 decades practicing in this space with combined experience in consulting, public accounting, and finance. My previous job types were with a hedge fund named Jane Street, RBS, Greenwich Capital, and KPMG, doing financial statement audits. And then, of course, I've been involved in several startups as well. I'm the founder and principal of Karpos and Associates, a boutique accounting firm located here in New Rochelle, New York. And we primarily provide accounting and tax advisory services to individuals, families, and small to mid-sized business. And of course, down the list is some ways we are involved in the community, and of course our professional affiliations on there. I have a master's degree in global finance from NYU Stern School of Business, and I also have a bachelor's degree in accounting from Baruch College Zicklin School of Business, and of course New York State licensed CPA. Just real quick, I just want everyone on this, session to note that this basically is for informational purposes only. We are basically trying our best to provide accurate and authoritative information on this subject matter, ERTC, and of course this presentation and any accompanying material does not constitute a legal, accounting, or tax advice. If you require any such advice, we ask that you speak to a legal, accounting, tax, or any other professional within the space and seek the advice accordingly. So let's get started. Just a little background as far as what we are about to talk about this morning. So historically, businesses or business tax credits are used by the federal government and many states and local governments to sort of stimulate the economy, right? Basically to encourage a particular type of corporate behavior. So we have credits like the Veterans Tax Credit, the Work Opportunity Tax Credit, the Research and Development Tax Credit that started somewhere around 1981, with a primary aim to increase technical jobs in America, right? And businesses who may claim this type of tax credit are businesses who develop, design, or improve products, processes, formulas, or any particular software. Then, of course, the subject matter of today's conversation is the Employee Retention Tax Credit, which was first introduced in March of 2020 as a result of the global pandemic, COVID-19. Now, on the next slide, how did we get here, basically? So prior to 2020, let's say around November, December of 2019, obviously the pandemic hit the world, right? In most other parts of the world, we heard of the pandemic in China, Asia, and many parts of the world. But of course, it did land on our shores here in the United States sometime around January, February of 2020. And that pretty much changed the world from that standpoint. People stopped going out, people isolated in an effort to reduce exposure. And of course, most state and local governments also restricted movements of people through lockdown orders, right? Congress became increasingly concerned about the financial and overall well-being of the economy, and therefore they sought to, throw money out into the economy to stimulate the economy, right? Among them were things like the idle loans, which most small businesses on this call are probably familiar, the PPP, ERTC, obviously to businesses, and of course the pandemic unemployment assistance, and of course advanced child tax credit more towards individuals. So the employee retention credit came about as a credit against federal payroll tax, basically covering wages from the period of March 13, 2020 through December 31st, 2021. And this was basically to ensure that employers or small business owners kept their employees on payroll. The main purpose was to have employers basically hold on to their employees on payroll while we made sense out of the ensuing pandemic. Now, on the next slide, basically who gets to take this credit? Who gets to take this credit? Primarily, if you had W-2 employees for the calendar years 2020 or 2021, and if the answer to that question is yes, what's the operation an actual business or a charity? If you answer yes to that as well, then does that business or charity qualify for ERC? There's a couple more steps that we go through to determine whether you actually do qualify for ERC. And we're going to talk about a lot of those steps as we progress through this conversation. Now, what wages actually count for the purpose of computing the ERC? I'm going to use ERC or ERTC interchangeably. They all mean the same thing: employee retention tax credit or employee retention credit, just so you know. Now, how and when can you apply for the employee retention credit? We'll talk about that. And of course, what is the cost and risk of applying for the employee retention tax credit? What if you get it wrong? What if you don't do it right? What are the consequences of not getting it right? Let's move on to the next slide. So who can actually apply for this tax credit? So basically, net earnings for self-employment individuals or sole proprietorships, right? 100% sole proprietors don't qualify for the employee retention credit. W-2 wages of family members of the sole proprietor also do not qualify according to that section code of the IRS. W-2 wages of employees of a sole proprietorship that is unrelated to the sole proprietor do qualify for the employee retention credit, okay? And on the next slide, we talk about C Corps and S Corps as well. So wages, along with that same concept, wages of 50% owner, including their spouse or family members of a C Corp or S Corp, do not qualify, don't count for the purpose of computing the employee retention credit. Now, the only time they count is if such owner has no living relative, brother, sister, whether by whole or half blood, or ancestor or linear descendant alive. So that's the only time they would qualify for that. Now, according to like an original position the IRS held when this whole thing started, wages of owners actually did qualify, and then later on they rectified that and said they weren't allowing wages of owners to count for the purpose of computing the employee retention tax credit. W-2 of family members of owners who own 50% or more of a C Corp or S Corp also do not qualify. Now, of course, W-2 of and wages of family members of owners who owe 50% or less of a C Corp or S Corp could count towards the computation of the ERC. Obviously, wages of unrelated employees do count for the purpose of calculating the employee retention credit. And then on the next slide, let's talk about how, so once we figure out what wages count and what wages don't count, how do you qualify for the employee retention credit? How do you get to take this credit? There are three main ways you could do that, right? So the first one is whether there was a full or partial suspension by a government order, whether there was a lockdown in your state, local area, or jurisdiction where you operate your business, right? That's one way to qualify. And then the second way is whether you had a drop in gross receipts. So taking 2020 compared to 2029, if you saw more than 50% in quarterly gross receipt for any quarter, then for that quarter, you qualify to take this credit. For 2021, if you saw more than 20%, again, compared to same quarter 2019, then you qualify. Then we have, again, I'm going to talk about these separately, but then you have the third way to qualify, which is the recovery startup. So if you are a recovery startup business, or what we call RSD, you can also qualify for that. And basically, RSDs are businesses that started after the pandemic. So what the federal government is saying is you were bold enough, you were brave enough to start a business amidst all these chaos, and you provided employment to people, and therefore they would reward you by allowing you to take this credit, okay? On the next slide, so per the IRS Notice 2021-49, let's go back a slide. Let's go back, sorry, on the next slide. So we're going to talk about the full or partial suspension by a government order or lockdown. To determine if your business basically suffered a partial suspension from operations or from the government order, we need to know if that partial suspension had a significant effect or what they call more than a nominal effect on your business, right? And by definition, what constitutes nominal is if it was not less than 10% of your total gross receipts compared to the same calendar quarter, 2019, where you were in existence. The second way to determine whether the effect of the lockdown had a nominal effect on your business is whether the number of hours performed by the employees in that portion of your business was not less than 10% of the total number of hours performed by all employees in that portion of your business for that same quarter in 2019. Next slide. Now, while full and partial suspension by a government order is basically one way you can qualify for it, you also could qualify for the employee retention credit if the government order caused a modification to your business, right? So we had a lot of restaurants who had to basically keep tables 6 feet apart. We had many stores back then who would allow no more than 10 people in these stores. And all these somehow impacted their capacity and ultimately their bottom line, right? So if these orders basically resulted in you losing sales because you couldn't have enough people in your store or in your business, or you couldn't have enough people basically come to patronize your services, then that would qualify you also to take the credit. Now, when you do qualify for the employee retention credit under the full or partial shutdown, you earn the credit only for the shutdown period. That's important to note. If you use this as a criteria to qualify for the credit, you can only take the credit for the lockdown period, okay? Next. And then, of course, the next thing we talked about is demonstrating a quarterly drop in sales or gross receipts. So like I said earlier on, if you take 2020 compared to 2019 for the same quarter, if you can demonstrate that you've lost more than 50% in that quarter, then that quarter basically qualifies you. And then, of course, for 2021, if you can demonstrate that you had a drop of more than 20% for that quarter compared to that same quarter in 2019, that obviously qualifies you as well. Now, for the purpose of qualifying for the employee retention credit, this criteria tends to be the most popular because it's the easiest to prove, right? You can basically just pick up your financial statements and pinpoint the various quarters in which you saw a decline in sales, and that'll get you there. Now, one thing to note, though, that for Q4 2021, they suspended this credit. So there's another way to actually qualify for this credit for Q4 2021, and that's what we'll talk about on the next slide, what we call the recovery startup business. So as I mentioned before, these are basically businesses or charity that started after February 15 of 2020, and basically had less than $1 million in average annual gross receipts, they will qualify as what we call a recovery startup business. Now, since the Congress basically got rid of the employee retention credit for Q4 2021, this is the only criteria by which a business or a small business can actually qualify to take the credit for Q4 2021. So if an employer qualifies under the drop, it's important to note that if an employer qualifies under the drop in gross receipts or partial lockdown, they can use this recovery startup business. Because clearly, they existed before 2020, right? The base year of comparison is always 2019. So if a business existed in 2019, they can't claim this recovery startup business status. And of course, for a recovery startup business, employers can claim $50,000 per quarter for up to $50,000 per quarter for Q3 2021 and Q4 2021. Let's move on to the next slide. So then you qualify to take this credit under any of these criteria. How much can you actually qualify for? So the credit, you can take the credit per quarter on a maximum of $10,000 wages paid per quarter, right? Now, for 2020, for the entire year 2020, you qualify for a maximum of $5,000 per employee per year. And then for 2021, per quarter, you qualify for up to $7,000 per employee for each of the first 3 quarters for 2021. So that means people who saw quarterly declines or who qualify for each of these years can receive a maximum of up to $26,000 per employee for both 2020 and 2021. Now, for Q4 of 2021, it is possible to get the $7,000 per employee if you qualify through the recovery startup business criteria. But of course, if an employer has more than, say, 10 employees who each receive more than $10,000, they will not get $70,000. They would get a maximum of $50,000 per eligible quarter for Q3 and Q4. So they can get a total of $100,000 in the employee retention credit if they qualify based on the recovery startup business criteria. Let's move on to the next slide as we explore when to file. So you now know that you qualify, you've checked all the boxes, you've gathered all the supporting documents. When do you file? And when can the IRS essentially come after you to demand support for these things? So for calendar year 2020, you can file up to April 15, 2024. And for calendar year 2021, you have up until April 15, 2025. Now, for Q3 and Q4 of 2021, the code allows them 5 years after April 15, 2022 to file. So the due date for the tax returns for 2021 was April 15, 2022, and therefore they allow you 5 years after that to file your employee retention credit. If you were going to go by the recovery startup business and claim for Q3 through Q4, you would be able to obviously take up to April 15, 2027 to file. Those same timelines represent when the government can technically come after you, examine, review, ask for additional support on whatever forms you file. Now, when it comes to fraud, there's no statute of limitation when it comes to fraud, right? It, in fact, never begins until you actually correct that fraud. So that's that. Let's move on to the next slide. With all that being said, I was having a conversation with a good friend of mine last week, and he mentioned that he has actually received an IRS challenge to the filing, and thank God he was able to provide the necessary document and the right type of support to the IRS. It is very important that we take this very carefully. Like filing an accurate return, the IRS takes it very serious. As we all may have heard, the IRS has staffed up quite a bit lately, and they are starting to go after people who abuse any of these stimulus packages that were doled out as a result of the pandemic. Okay, so for instance, let's give some examples over there. If you are caught on any charge of conspiracy, right? Basically, you pay a fine, and you could also serve a 5-year sentence, right? If you're also basically convicted of any bank fraud, wire fraud of any sort, then you stand to basically be sentenced for at least 30 years imprisonment. And then, of course, 25 years for wire fraud. Now, on the next slide, we can talk a lot more about some of the violations. If you're caught, on any transactional money laundering stuff, essentially you pay twice whatever the amount of the transaction is, and or 10 years imprisonment. Okay, and then of course any forfeiture allegations, you forfeit all property that was derived from such transactions that came as a result of that. Now, all these are said not to scare anybody. If you are in a position where you haven't filed, the only thing to do is to make sure that you seek help from the competent and right professionals who can help you through, because this can get a little bit nuanced, right? Now, if you've already filed and you are also receiving notices, definitely, contact the right people. There's definitely help for people who are in positions like that. If you contact our offices, we'll be able to connect you with some of our partners who will be able to help you resolve some of these issues as they come up. And on the next slide, you can find our contact information on there, on how to reach us, how to contact us. Of course, we are based in New Rochelle. That's our phone number and our website information. We're also on most social media platforms. And yeah, I think we will now take any questions that the audience will have.
Ben, thank you so much. I appreciate it. I'm just getting the questions organized. It'll take me one moment. Andrew, you're welcome to speak while I do this if you would like to.
Great, thanks, Renee. And thank you, Ben, so much for the session. I think the things that, this is really a program that I think a lot of small businesses may have heard of the initials, may have known a little bit about the program, but I think figuring out ways to kind of connect with it and how this program may be relevant for you with respect to, as Ben kind of alluded to, sort of thinking about eligibility, how you might be able to find one of those categories to make yourself an eligible participant, and then B, sort of thinking about, as Ben has sort of walked through in terms of some of the calculations, these are really, really impactful and can be very, very beneficial to small businesses. And the third takeaway, I think, Ben mentioned sort of, I guess, having some time available. So if you sort of feel like you've filed your taxes, hadn't given a great deal of thought to it, there still is a window of opportunity for you to take advantage of these credits, even going back as far as 2020. So, there's a lot of food for thought here, and I know there may be some, I know Renee is going to be queuing up some questions. The things that we want to make sure that we go through in kind of the limited time we have today is sort of thinking about kind of generally how this may apply to your business, and sort of thinking about, there may be sort of extenuating circumstances that would, that apply to your business with regard to employing relatives, or, employing or engaging, contractors instead of employees, or thinking about those sorts of categories that may be relevant to everybody as far as the Q&A goes, I think will be really, really useful. And then if there are more kind of questions that are personal to your specific business, I would guess, as Renee alluded to, maybe we'll take that offline. But Ben, thanks so much for kind of walking us through this and giving us a lot of material to consider. And with that, I guess I'll, shut down, or I guess shut up for a minute. Ben, I'm sorry, Greg, are there any things that jumped out at you that you want to kind of touch on while we have, I guess, queuing up questions?
No, I mean, I think it's, again, a great opportunity for entrepreneurs out there to get some capital, some non-dilutive capital. One of the issues that so many of our clients face on a consistent basis is the need for cash flow, and this is a potential way to address that. So it's a great opportunity, hopefully.
Absolutely, Greg. Absolutely. We've had clients who've been able to receive as much as about $80,000. And the way things are right now, with most small businesses taking a hit with the economy, I think that comes in very handy. And so I would definitely implore people to explore that if it's something that they qualify to actually make it a point to explore that.
Cool. Thank you for that moment. There's a question early on if it was too late to apply for a 2020-2021 situation. And what I got from that was Q1 2020 through Q2 2021. You have 3 years after April 15th. And then Q3 2021 through Q4 2021, you have 5 years after April 15th. Is that correct?
Correct. So technically for 2020, 2020 calendar year taxes are due April 15, 2021. So you have 3 years after April 15, 2021, which is 2024. And then 2021 are technically due April 15, 2022. So 3 years after that puts you to April 15, 2025. And then, of course, for Q3 and Q4, 2021, you have 5 years after April 15, 2022 to apply for it. Now, those same timelines, as I indicated earlier, also are the same for how long or when the IRS can technically come after you for support or challenge any of the positions you took in applying for this particular credit.
Great, thank you. Regarding lockdown, assuming you meet the lockdown definition, would you still qualify if your business was still operating during the lockdown?
Yes, you would qualify. So as I mentioned earlier, you would have to demonstrate that your business wasn't significantly impacted by the lockdown. So, or your business didn't suffer a nominal effect compared to that same quarter, 2019. So for instance, what they're calling a nominal effect is about 10% of your gross receipts, right? So you didn't make less than 10% of what you would normally receive compared to same quarter 2019, or you didn't suffer, say, less than 10% of the number of employees you would normally employ to work, right? That section of your business compared to same quarter 2019. Yeah. If you didn't obviously lose less than 10%, then your business did not suffer what they call a nominal effect, and you would still be able to qualify.
Thank you. Is the money received considered taxable income?
Technically, yes. So this is a credit against payroll taxes. So the way this works from accounting standpoint is this reduces your payroll expenses, and so it creates lesser payroll and more income, right, for that particular year. So it's more income. So for C Corps and potentially S Corps and their owners, technically they would have to go back and amend their taxes for those years. But again, we still have the statute of limitations in place for those. For those years as well.
Great. This attendee has received several notices regarding applying for this program. Is there a fee involved with applying through a company? If so, what would be a likely percentage?
So different providers charge different fees. We work with different payroll providers who have their fee schedules. And if anybody is interested, I'll be happy to share that with them offline. And we also do some in-house, and we have set fees. But typically, we've seen people charging a percentage of refund. We don't do that. Obviously, we are a CPA firm. We don't charge contingency fee. We charge primarily based on number of hours spent and the advisory bit of it. But we know there are different fee options out there. We'll be happy to discuss that with anybody who's interested.
Very cool, because there was another question. If you know of qualified individuals or firms that can help with the filing. So that will be a good one.
Yeah, they can reach out to that number on the screen right now or email me personally, and we'll be able to help them sort it out.
Very cool. Thank you. What are the PPP exclusions? Are PPP forgiven loans excluded?
Yeah, so the way that works is for any quarter you are applying for the employee retention credit, it cannot be for the same quarter for which your PPP was forgiven, right? So the covered period of the PPP can be the same as the quarter you are applying for the employee retention credit. In other words, you can't double dip. If they forgave your PPP for Q2 2020 and you do qualify for ERTC for Q2 2020, you won't be able to take it for that quarter.
Very cool. Thank you. And Andrew, maybe you can clarify here. What types of questions should folks send to Ben versus the types of questions they should send to your team?
Thank you for the question. I think just to manage Ben's inbox and also to kind of be respectful of his time, I'm happy to take all questions. If you want to send them to our email address, and I'll put that in the chat again, which is SBDC, which stands for Small Business Development Center. So it's sbdc@pace.edu. And Greg and I can work through those questions that we can manage, and then we can kind of route and loop Ben in, just again, to be respectful of his time and kind of collaborate with him and his colleagues at the NYS, the State Society of CPAs, to be able to help those businesses who have kind of more technical issues in terms of the application process as well.
I appreciate that, Andrew.
My pleasure.
Absolutely. Back to the PPP. What if the PPP amount they forgave is significantly less than your payroll costs?
So as long as it doesn't cover the period for which you are applying, then you wouldn't, you'll still be able to claim partial credit for the employee retention credit. So I'm guessing for this particular question, they received less PPP, but for the quarter, right? But they qualify. So PPP for most people covered about 6 weeks. Very few people had 24 weeks and so on and so forth. But within the quarter, I imagine you have at least 12 weeks. So if you only used up the PPP to cover maybe 4 out of the 12 or 13 weeks, then you should be able to qualify for the other weeks for which you didn't get PPP forgiveness.
Thank you. This is a long one, but I'm going to summarize it, so I hope I give it my all. You mentioned the IRS is fully staffed right now, so I'll mention that. Do you know the due diligence the IRS actually does before approving the fund?
It seems pretty thorough from what we are seeing. We are seeing refunds, like processing time generally go from 6 months to a year. So you can imagine the level of scrutiny that's going into these applications. There's a lot of due diligence that's happening, and in the event that they miss anything, they still reserve the right to come after you, like we talked about 3 or 5 years after you file anyway. So yeah, they are doing a lot of due diligence. This is one area that I would not trifle with at all.
Thank you. So we went through the dates for the qualification guidelines, but just to double clarify, because we had a few other questions on it, there is still indeed time to apply for the tax credit, correct?
Correct. So correct, there is still time, but as I always say with a lot of these public funds, if you are eligible and you have the support, I would say to jump in and apply right away, because you never know as things get complicated, right? We've seen instances where programs are halted midway because there are not enough funds, right, to cover these payouts. So if anybody qualifies, yes, they have time, to still put in a claim for it, but I wouldn't see why they would hold on to and not apply. I would jump on it right away.
Yeah, I would reiterate what Ben was describing. Certainly our experience with a wide range of programs that the federal government has released, New York State has released, New York City has released with respect to pandemic recovery in particular, when you're looking at grant funds, when you're looking at tax credits. I mean, these are things that are going to effectively be, as Greg had touched on, kind of, cash for cash equivalents for your business. These are very, very popular. I mean, they are time intensive. There's certainly a lot of effort involved with respect to pulling together the material, but these are really, really beneficial. And it's, there are certainly, deadlines in terms of submission, but it's also, given the volume and popularity of these programs, once they reach the program maxes, that'll effectively replace, what would have been the deadline date. So I would reiterate what Ben was saying. And, if these are of interest and if they're relevant to your business, certainly start to pull your materials together and consider whether it might be a good fit for you.
Do you anticipate there being a 2022 ERTC?
Not quite sure about that. I don't think so because, but they took it down. So as we can tell, like by the time they had the vaccine, that sort of correlated with when they took down, right, from the 50% drop in sales to 20% drop in sale. Now, like, it's unlikely. It's unlikely. They might come up with something else depending on how the economy goes, but no one knows, right? Like it's Congress is always, like I said, looking for ways to stimulate the economy if they see that things aren't going the way they like. So we don't know yet. As far as the employee retention tax credit for now, it covers payroll from Q1 2020 to Q4 2021. As far as 2022 will be considered, we are yet to see that.
Great, thank you. I know you mentioned that the IRS has taken quite a bit of time to review these very thoroughly. What was the estimated time that you mentioned, or was that a worst case scenario?
So anywhere between 6 to 12 months, we've seen. One client received their refund in about 5 months, but that's the only one I've seen. But for the most part, people can expect anywhere between 6 to 12 months of processing. It's a more realistic expectation.
And in terms of the timing, I guess something that I'll build in as well, and this is more a plug for connection with SBDC advisors throughout New York State, is if this tax credit is important for your cash flow, thinking about interim solutions that may be able to get you through until that money actually comes in. So working with a business advisor, thinking about what other sources of funding might be out there, whether it's a line of credit that may be relevant for your business to help you get through, maybe there's some seasonal cash flow issues your business is working with. Maybe you're counting on these funds to be able to, buy some new inventory or equipment for your business to kind of take advantage of some new opportunities. Think about maybe a term loan that, doesn't have prepayment penalties if you get the cash on hand soon enough. So thinking about strategies like that and being able to look deeply into your cash flow, sort of working with Greg and our colleagues, throughout the state, give businesses an opportunity to think about how to best look at this funding source and how it may be able to, help you look at growth prospects that are coming down the pike.
Ben, I actually have a question. In terms of some of the small businesses that you work with, have there been are there any like common sort of like hiccups or mistakes that entrepreneurs make that you could speak to in terms of applying for the credits?
Yeah, so not having enough support or not having their support in place, right? So we want to see, obviously the financials have to be in order before we can tell whether you had a drop in sale or not. But more importantly, we want to see that all payroll filings are accurate and up to date. And half the time we find that a lot of small businesses are lagging in these areas in terms of providing a more robust support to sort of back up these claims we make for them. And they are either understaffed and so they are slow in getting us information, or they just don't have adequate support in place. Because that's going to be crucial. Once you get that dreadful challenge from the IRS, you want to be able to put your best foot forward, and nothing beats a strong official support. So that's the one thing we are seeing.
Thank you. Andrew, correct me if I'm wrong. I believe your website has some more information or a blog covering some of this. Am I thinking correctly there?
This program, there are a wide range of pandemic recovery programs that we do focus on. We're pulling together material for this one specifically, but I think this is really kind of a kickoff for us and our colleagues throughout the state in terms of looking at, how to build this into your repertoire programs that you kind of apply for. But I will put a link in the chat to other pandemic recovery programs that are available, in particular for those of you here in New York State. Hopefully most of you that on the call are joining from here. There are a range of grant programs, some low interest loan programs as well, that are available and are live presently. So if you have not worked on those, there's a seed grant program amongst them for more recent businesses that I'm going to put in the chat. Our business owners, clients have taken advantage of this. I think it's a really valuable new source of funding, and Greg and our colleagues throughout the state can help you kind of pull together the materials and get access to those programs. So thanks, Renee, for the plug, and I'll throw that in the chat now.
Yeah, no plug. I was just predicting the future. And it was based on a question. Someone was looking for a handout that they could reference regarding all of the information covered. I did let them know we'll be sharing the recording, but if we get that all in one place, that link to the website will be a good place to keep an eye out for it. You mentioned this a couple times already. Apologies, Ben. Is it a quick answer to give the PPP forgiveness formula one more time?
As it relates to the employee retention tax credit?
Yeah, yep. This person was forgiven for both of their PPPs, so they want to help determining if they still qualify.
If they still qualify. So in determining whether they qualify, obviously the first step will be if they met any of those three criteria, right? If there were like a governmental order to lock or shut down that impacted their business, if they had a significant drop in sales. Now, if they were a recovery startup business. If any of those sort of overlap with the PPP forgiveness covered period, then we want to make sure that we leave that portion out. So these are all things that the preparers would help you navigate. So they'll ask you information on the covered period for which you requested forgiveness for the PPP. If those same covered period happens to be the quarter for which you are applying for the ERTC, then they'll just bifurcate that portion that relates to the PPP, so you don't double dip. That's the whole idea. That you don't want to you don't want to essentially double dip. You can't take the PPP, the ERTC for the same period for which you were forgiven the PPP. So you get the answer is you could still qualify, but it won't be for the same covered period.
Okay. Lawrence divided the PPP loan by 168 days and broke that up by days in each quarter that were in their PPP loan window. Is that the appropriate way to avoid double dipping?
Sorry, say that again. What did they do?
They divided their PPP loan by 168 days and broke that up by days in each quarter that were in the PPP loan window. And if this is one you want to take offline, just let me know. I know it's very detailed.
Yes, I could take that offline because there may be a few nuances to that. Yeah, I could take that offline.
Okay.
Speak further on that.
Okay, so Lawrence, for that question and your following one, I would recommend following up with Pace so they can either answer your question or contact Ben for further assistance. And then we had one question around the EIDL, and if you would qualify if you'd received the EIDL.
Yes, as far as, yes, you would qualify if you received the EIDL. So there's two EIDLs. There was the EIDL advance that was forgivable, and then there's the EIDL loan that you have to repay that back. That's a loan, so that doesn't affect the ERTC at all. And the advance doesn't impact the ERTC either.
Okay, very cool. Can you go back and explain the W-2 wage of a family member over 50% owner of a C or S Corp? And
Sure.
why they don't qualify? And I can go back to that slide too if you'd like.
Yeah.
Let me know if I go by it.
Yeah, right there. So basically, they don't want business owners employing themselves and their family members and taking the credit. You're taking the public funds, right? Selfishly. So the idea is they first said you could include wages of, the IRS came out when this whole thing started and said you could include your wages as well as wages of your spouse or family. And then they came back with another ruling that says, in fact, we're not allowing that because people were taking advantage of it. A lot of small business owners do employ their family members. Some employ their kids, spouses, and their relatives. So what they came up with is, look, if you're employing your relatives, you really aren't helping, or I guess that's their way of making sure that people don't abuse this from a selfish standpoint. So they came up and said, if you were a 50% or more owner of an S Corp or a C Corp, then your wages wouldn't count. Your spouse's wages wouldn't count for the purpose of computing the ERTC. Your immediate relatives' wages wouldn't count. But if you had employees who aren't related to you in any way, then those would count. Does that make sense?
Yeah, if it doesn't, they will let me know.
Sure.
Does a business with 1099 contractors, are they also eligible?
No.
Okay.
It's only W-2 employees.
Okay. And there was a question about the application process, but it was for the 1099, so I don't know if they still want an answer on that. But did you want to give a high level on the application process and how long it might take?
Right. So the application process first starts with, I guess, the intake forms, right? Where if you, for the clients we work with, we take information on all funds received, WOTC funds received, PPP funds received, and so on and so forth, right? And we basically take them through the qualifying criteria. Did they experience any lockdown that impacted their business? Did they see a significant drop in gross receipts? Were they a recovery startup business, right? So we do all of that stuff, and then we also take their payroll register, see who was on there, to determine who was a family member. So there's a whole questionnaire that we go through with our clients to determine if they employed a family member. If they did receive PPP forgiveness, for what period? So we can bifurcate that to make sure that they are double counting, right? And once all of that is done and we determine the amount of credit to qualify for any particular quarter, we then go on to amend the 941 for that quarter. For our firm, everything is done by paper. There's no platforms we work with that support electronic filing. And so once we determine that, we go ahead and amend your 941 for the particular quarter that you qualify and go through that with you and have you mail it out to the IRS. Then, it's just a matter of waiting to hear back from them. Typically, before they send any refunds, they issue a letter notice to inform you that your claim has been approved, and you should see a check in the mail momentarily or something. That's
Thank
what
you.
the application expects.
Is there any advance that the IRS has been doing?
Advance for this?
Yeah.
No, it stopped. So it used to be when it first started during 2020 and during 2020 mostly, you could take an advance by filing the 7,200. So they stopped, and so you have to go back and amend for the quarter to take the credit.
Thank you. Andrew, for the folks that have some follow-up questions and for any questions that I didn't get to, for that process, does it make more sense for them to email you or call your office or to fill out our intake form from the get-go?
Anybody that's going to receive direct service from our center or from any of our colleagues, if you're joining us from elsewhere in the state, you'd ultimately would fill in the counseling request form. The easiest way to kind of get started is just to contact us and we can kind of walk you through that. I did put a link in the chat in terms of how to get to the electronic version of the counseling request form, but just to simplify things and make sure everybody has kind of a point of contact and a way to kind of get the process rolling, I think just emailing us, letting us know that you joined the session, you have specific questions about the RTC or other items that may have come up today, you know, whether it's other pandemic recovery programming or other, you know, issue areas that we may be able to support you on. And then just we can get that process started. At that point, we would connect you with a business advisor, whether through our center or whether through our colleagues elsewhere in the state. And again, all of our services are offered at no cost. But I think starting with the email is probably the best way to go.
Very cool. Ben, do you know if you owe the IRS money or your business does, will they keep the money?
I haven't seen that. You know, I haven't seen that. That would be an interesting one. I haven't seen that, but it's, you know, the IRS can do whatever they want typically. So, but I wouldn't let that stop me from applying if I qualify. You know, what do you have to lose? You know, apply for it and they choose to hold on to it. That's just, you know, yeah. But I haven't seen that yet. Although I have to say, I haven't seen that. It's unlikely, I would say, because for a lot of the pandemic-related stimulus, they did do that. So I don't see why they would with this particular credit, but you never know.
Okay. There was a question regarding payroll taxes and what's included, and I believe I found a good website for it. If Andrew or Greg want to double check what I just dropped in the chat, that should help answer the payroll taxes question that came in. And we are approaching the end of the questions, I believe, which is great because we have 2 minutes to go. So this might be another one that would be good to take offline, but I'll try to summarize it. If you have not filed your 2021 taxes or filed the 941X, but you have calculated the credit amount, is it okay to file your taxes assuming the credit is going to be received so you don't have to amend the taxes later?
No, so I wouldn't incorporate an anticipated refund in your taxes because it is still subject to IRS processing, rejection, and denial, right? So if you include that in there, then you still would have to, if they decline, you still would have to go back and amend anyway. And that's where the whole statute of limitation comes in, right? You don't need to rush to amend your taxes. You first have to file the claim, make sure it gets approved. Getting the claim approved itself is quite a task. I would start with there, and once it gets approved, you can go back and see what periods need to be amended.
Okay. So there were a few other questions that I didn't get to ask fully. So I'm going to recommend for those that you do follow up with Pace. They were more specific cases and then follow-ups to some follow-ups. Let me just triple check that I didn't miss any new ones. There was a slightly off topic, but you might know the answer to. Have you heard if it's difficult for folks to apply for the youth job tax credits?
For the what? Youth job?
Yep, youth job tax credits.
No, I haven't. I'm not that familiar with that. I'm not
Okay.
that familiar with that process, at least. Yeah.
Yeah, that might be a good one for you to send to Pace, because if they don't know the answer, we have an amazing library system that can do the research for you and get back to you there. Cool. I apologize for any that I missed. Ben, Andrew, Greg, Jenny, I know you're there. Thank you so much. Ben and Andrew and Greg, I will let you have the last words.
Again,
I'll-
thank you all. Right?
I'll kick it off by saying, Renee and Jenny, thank you so much for working with us on this program. We really appreciate your continued support and collaboration. And Greg, thank you for being my partner on the Pace SBDC side. And in particular, I guess, Ben, thank you so much for kind of reviewing all of the material and for your work and collaboration with the State Society of CPAs. It's just a great kickoff session for us and for our clients, as you can get a sense. There are a lot of really kind of involved questions, and there's a lot of material here. So I think we wanted to make sure that we shined a spotlight on this program, as I think there's some great opportunities for small businesses to be able to access this capital and be supportive and helpful to them. So thank you for leading it. Appreciate it.
My pleasure. Thank you all to Andrew, Renee, Greg, all of you, all of the team for facilitating this. And thanks to the audience as well for taking time out of their busy schedule to come listen to this session. If there's any additional information, I'll definitely share with Andrew and the team, and so you can reach out to them and they'll be able to put you in touch with us. Thank you.
Absolutely. And I did fail to mention there were many thank yous that rolled in, and this was a great session. Lots of wonderful, wonderful items learned. Greg, I hope I didn't interrupt you. If I did, you may speak.
Oh, no, not at all. Renee, thank you. Ben, thank you very much. Appreciate everyone who joined us for the session. And we look forward to trying to help you further beyond today. So as Andrew said, please feel free to reach out to us by email, and we will keep things moving forward.
Absolutely. And Andrew, I don't know if you mentioned this, all of our business advising is free, but it is paid for by your tax dollars. So it is in your best interest to take advantage of it. When I do shut down the webinar, you'll be prompted to complete a survey. There are tons of questions on there. There are two that we really like. We would like to know how today's session went and any future sessions you want to see. Every question is optional. And if you do come to the area where you have to rate us on whether or not we answered your questions, please know that if I didn't answer it during the session, we will have follow-up answered for you from Pace. So you can make a note in there too if you do have a follow-up question, and Pace does look at that report and we'll get back to you. Keep an eye out for the recording. It should hit your inbox in a couple of hours. It will be coming from GoToWebinar. Also, if you have any questions and you missed any of the contact information that we dropped in the chat, you can just reply to that GoToWebinar email and that will go directly to Pace. Thank you so much. Apologies, we went 4 minutes over, but I think it was a great session and I appreciate everyone who joined. Take care.